Hello, my name is Richard Alm, and I'm with the Bridwell Institute for Economic Freedom at Southern Methodist University. And I want to welcome you to the 10th Texas Economic Forum. The first 8 of them were under the auspices of the O'Neill Center. And the O'Neill Center has now morphed into the Bridwell Institute, thanks to a donation by Tucker Bridwell, who lives down in Abilene and has come along to help us do our work and build a new building for the SMU Cox School of Business. Today's topic is what's next, issues and challenges for the state's economy. And I think we're going to try to just discipline the discussion a little bit by breaking into 2 parts. First is the short run version, which is look at the pandemic shock that we've been through in the last year or so, and the recovery that we've been seeing, so far this year. I do think the recovery is arrived because 2 things. As I walked down Greenville Avenue this morning, there was a help wanted sign in just about every place you could eat and drink on the street. So evidently they need some people. And my old boss from the Dallas Fed, Richard Fisher, proclaimed the recovery underway in this morning's Dallas Morning News. So, in the second phase of our discussion is the longer term prospects from what's happening nationally, globally, and everything that's going on that's going to affect the Texas economy in the longer run. Now, we have 3 people who know a lot about what's going on in Texas. The first is Mike Cox. He was the founding director of the O'Neill Center, and now he's still at the Bridwell Institute at Texas, and he's my colleague at SMU Cox. Vance Ginn is, I think, the chief economist at the Texas Public Policy Foundation. He spent the last year or so up in Washington as a senior economist at the Office of Management and Budget. And last but certainly not least, Orrenius, who's I don't know what her title is these days. Maybe it's not, I don't really care. She's been at the Federal, I used to work with the Federal Reserve Bank of Dallas, as with Mike, and she keeps track of helps keep track of the Texas economy at the Dallas Fed. So what we're going to do for the first, I'm going to go around and let you meet these 3 people. We're going to just have a short introductory statement by each one about the short term, the pandemic and recovery, and we'll go in alphabetical order. So we'll let Dr. Cox lead off.
Well, the U.S. economy kind of looks like the Nike check mark, down quickly, back up, but leveled off, having a hard time getting back up to where it was. The Texas economy looks the same and has done remarkably well, despite the fact it's been hit by a couple of extra things: oil, not yet recovering, and then trade. So we're doing pretty good, and why economic freedom is our strong suit there. We're going to get into later the particular sectors, and I'll save talking about that. Jobs are coming back, but they're not coming back in all sectors, of course, and some of them are never going to. We want to talk about that. And we want to talk about what's holding back some of the recoveries in some sectors. And Vance in particular is going to get into some of the no-nos that are going on in government policy. I won't go into that any more with that. So I don't want to give away all my little punchlines here, but let's just say that we're kind of, recovery, as Richard Fisher said, is on the way, but we're not, it's stalling. It's not really just normal, robust recovery we'd like to see.
Vance. Your microphone.
Yeah, yeah, of course. Rick, Mike P, it's a pleasure to be with you all and to the viewers today. I'm looking forward to having this discussion about the Texas economy. I was right there at the White House as the chief economist of the Office of Management and Budget when COVID hit last year, and just the enormous uncertainty and the crisis mode that we went in. But we saw that happen among families, among state governments, and others, and business owners right across the nation. And it's remarkable if you think about where we're at today compared to where we were just a year ago. And I look forward to having some of these key discussion about, to your point, Michael, about the check mark and the surprising things that we've seen from the private sector to bounce back as quickly as what they did. And I think as we begin to continue to reopen, and in Texas, we're fully open as of March 10th, I think that will also help to re-energize the entrepreneurial spirit of the Texas economy, as long as we can make sure that we're not overtaxing, overspending, and overregulating people across this great state. And so I look forward to the continued discussion that we're going to have here today.
Pia.
Thanks, Rick, and thanks for having me today. So when we look at how Texas has done, I mean, we outperformed the nation in the pandemic, as Mike was mentioning. And really, when we think back on it, it was really remarkable, given that the energy sector in particular cratered at the same time as we went into economic lockdown and the pandemic was spreading. But again, like Mike was saying, despite doing better than, better on average than the nation, I mean, Texas families and businesses still had a very hard time. Countless small businesses have closed. Over 1 million Texas workers are still on unemployment. The state is still in a huge jobs deficit with over 500,000 jobs that we need to recover to get back to where we were. But that said, I mean, the economy right now is growing pretty rapidly. In the fourth quarter, Texas had the highest GDP growth in the nation. And last month, job growth was over 10%. So I think we are in a rapid recovery, but I think there's several downside risks to that. And I guess we'll talk about those next. Thanks.
All right, so now what we're going to do is just try to have a conversation with these three experts. And anybody want to start by amplifying on what they just said? Mike, want to go into those sectors?
Well, Vance, you know the overall numbers for the nation. You want to start with that and let me go into the sectors after that? How would you like to start?
Yeah, I think something along those will work. I mean, some of the things that I've been keeping an eye on when you're thinking about the overall economy, as we know, during the pandemic, the sectors that were really hurt the most were leisure and hospitality. I mean, most of those jobs were just decimated, and families were devastated who had those jobs. And those are going to take a little while to come back. I mean, we've seen some bounce back here recently, but we still got, a ways to go nationally and even here in Texas. And one of the things that I'm also looking at is been some recent reports out there that just for restaurants, for example, there are about 200,000 jobs that are open that are unfilled. And so part of that gets into the discussion too about what the federal government, what Congress has been doing with these different quote unquote COVID relief packages, with the latest one being the American Rescue Plan Act, $1.9 trillion. Part of that was to give money to states and local governments of about $350 billion. Texas, for example, received about $40 billion, $30 billion to the state, $10 billion to local governments. But another part of that ARPA is what I like to call it. ARPA also was, the quote unquote stimulus checks that were sent out to people. So that put more money in the hands of families. Also, you had the plus up from the federal level of about $300 per week of the federal unemployment insurance. And so these lead to trade-offs, which is in economics, one of the number one lessons that we would teach in our Econ 101 courses of trade-offs matter. And so if you can take this extra $300 a week and what you're getting overall in unemployment insurance here in Texas and stay at home on the couch or whatever else it is that you're going to do instead of going out to work, where you may actually get paid less than that on a monthly basis when you include the state and federal unemployment insurance, that gives a big trade-off. And when you're working at a restaurant, you may decide to stay home. And so we're seeing some of these labor shortages, not necessarily because the jobs are just so plentiful. Like we had, I would say back in 2019, when the economy was really, booming and there was a lot of jobs that were available. And something we would talk a lot about at the White House was that, we have a labor shortage, but it was because there were just so many job openings, right? As the economy was continuing to expand. Now we have another type of situation to where there are a lot of jobs that are now becoming back online as the economy's opened up and people are starting to go out to restaurants again as the vaccines have kicked in. A lot of the restrictions that have been put in place by the state government have been removed here in Texas. But a lot of people aren't wanting to fill those jobs. Some of that could be that they are concerned about the virus, that they don't necessarily want to go back to work yet. But at the same time, I think there's part of this that's contributing to it is the decision to stay at home and get the unemployment insurance and things of that nature. And so that's something that we need, to watch over time. I was looking at some of the latest numbers, and the leisure and hospitality sector is still 10.4% below where it was back in March of last year. It's about 142,000 jobs where they were before then. And as PM mentioned, the oil and gas sector was also hit hard. Y'all remember this last year where oil prices actually went negative there for a little while. It's something else to see that we're above $60 a barrel now. But mining and logging is down almost 50,000 jobs from where we were last year. Some of that's been coming back online some. The private sector as a whole is down about 350,000 jobs, 3.2% compared to where we were last year. But we did see some bounce back. Just in March, there was 106,000 jobs that were created in the private sector, which was a 1% increase there. So we're starting to see some bounce back in a lot of the key sectors of our economy. And so if you look at trade and transportation, that's up 13,800 year over year. And professional business services is also improving. So I think we're seeing the expansion start to contribute to more job creation. And that's good news for Texas families and businesses. And so even though we've been through such a remarkable time over the last year with a lot of suffering and lives and livelihoods along the way, I'm optimistic about the future, especially given what I'm seeing at the Texas legislature. We could talk more about throughout this discussion so far here this year.
I'm
Go ahead.
gonna reserve the word expansion till we make up those 500,000 jobs.
True.
There are a few standout sectors. There are a few standout sectors I want to call to your attention here, which are behaving unusually. And one of them you mentioned is the only sector that is worse off today than it was in April. At the bottom, that was the trough for the U.S. economy of April of 2020. Out of the 20 sectors that at the two-digit level, the one that still is even worse is mining, the oil and gas sector. Everybody else has recovered at least some, but not oil and gas. And Pia can talk about that, what that does for Texas. But arts, entertainment, and recreation sector has more than half recovered from being down, jobs being down 76% to now being only down about 33%. Arts, accommodation, hotels, and food services has recovered from being down 65% job loss to being down only 18%. The one sector that did the best throughout this whole period was finance and insurance, only lost 0.6% of its jobs from peak to trough, and now is actually up 0.5%. It's interesting, but the information sector is having a hard time recovering, but that includes motion picture. And motion picture is still down 52% from its peak. The other parts of the information sector are doing okay. And then the other sector that's still having a little trouble recovering, more than a little trouble, is rental and leasing services. Although there's a rental car shortage right now because rental car companies kind of overdid it on closing their shops. I guarantee you that there will be a recreation and leisure boom coming in this economy as soon as people can get out. I'm already spending a bunch of money booking trips, and other people are too, I know. Mm-hmm. So I'll stop there and let Pia say a little bit, and I'll come back and talk some more about other things later.
Well, I think you guys gave a great overview. I think what we're seeing in our Dallas Fed surveys, where we survey over 600 businesses every month in Texas, And what they're telling us is really that the biggest constraint on this recovery is the difficulty hiring. And so things like hours worked, our indexes for hours worked are hitting record highs because, they're having to work their existing workers much harder and paying overtime because they're unable to hire. And a lot of this is in the service sector. A lot of this is in the low wage sector. So the low wage sector is, as Vance was mentioning, impeded by some people can really make a better living, collecting unemployment benefits at least through September. But there are other issues. I mean, for women, it's a lot of childcare issues in terms of schools being closed or virtual schooling or daycares being closed. And so that's been a huge concern. And people are still worried about the spread of the virus. And so I think that's impeding some of the return into the workforce. I really think the second half of the year is going to be very interesting to see how many people we can bring back into the economy and take some of these unfilled jobs, because as Vance was saying, the unfilled jobs, the job vacancies are spiking to levels we haven't seen before, both in Texas and nationally.
That is a really important point, and Vance said it, and I'm going to say it too, and I want everybody to understand this. Government policy right now is getting in the way of progress. If you've seen the movie, Grapes of Wrath, you remember Henry Ford going around the country in his pickup truck looking for the job in the fields that never came back, but he kept looking for it. And a lot of these jobs that we lost during COVID are not coming back, yet people are still looking for them, and they're able to keep looking for them because government keeps giving them handouts. And as soon as government quits giving them handouts and quits paying for them to sit around and hope that those jobs come back, and then they'll have the opportunity to discover that those jobs aren't there. And only once they discover that, will they go look for the jobs that are there. So this is a really, we're impeding the economic churn, out with the old, in with the new. That is the only way America ever recreates its economy.
Well, it wouldn't be a show without all these economists if we didn't say, nothing is free, right? and nothing is free. And this is another great example of how that's the case. I mean, if for one thing, these unemployment insurance dollars have to come from somewhere, and they come from taxpayers. In Texas, we owe the trust fund to the federal government of about $7 billion for unemployment insurance right now, that if that's not paid would be a substantial increase on the employer tax that pays for unemployment insurance, right? So this money has to come from somewhere. And unfortunately, on the other side of this, when they receive this money, it is changing their behavior of workers, of whether or not they want to stay home or not. One of the things that I've been looking at closely is the stringency of the restrictions that have been put in place on businesses across the country. And one of the things that I've looked at has been, if it does it have a Republican trifecta or a Democrat trifecta, and not getting into the politics of this, just looking at the facts on the ground. And if you look at Texas, with Republicans in the House and the Senate and the governor, if you look at the other sort of Republican trifecta, we have the highest unemployment rate right now, 6.9%. It's the 13th highest unemployment rate in the nation. However, eight of the top 10 unemployment rates are all in Democrat dominated states, right? And so one of the things that I think we need to be able to consider here is, what were the stringency that have been put in place on the situation dealing with the pandemic overall? And it'll give us a lot of research to think about over time, what level of stringency was needed. I mean, this may have been the perfect way to do it, but we also need to understand, again, going back to trade-offs, that those restrictions that were put in place also affected the livelihoods that we've seen throughout all the data we've mentioned so far.
Okay, Rick, before you start, can I just say one small thing? While I agree with Mike and Vance, I do want to point out that because the government went above and beyond in terms of, transfer payments to impacted households, that did really help sustain consumption through the recession. And so we saw very little decline in consumption, even increase in consumption among low-income households. And so, and then with the forbearance provisions on student loans and mortgages and the ban on evictions from apartments, I mean, that really did help families. So, I mean, if you contrast with like the Great Recession and the financial crisis, where we didn't do enough, maybe we did too much, but it really did help during the pandemic. It's just that now we're in the recovery and we kind of need to peel some of this back maybe. But I just did want to say that we saw a dramatic difference in the consumption levels of households in this recession. They were sustained. They were able to, for the most part, they were able to continue, to consume and continue to pay their bills.
I agree with that. And it's very smug and arrogant of three economists to sit here, one of which has never had a day of unemployment in his life, to talk about people who are going through hardship having, you should give up your unemployment benefits and go look for a job, right? I don't mean to sound like that, but I have had several job transitions in my life. And I know that, when you really have to transition from one job to another, that's when you really start looking. I'm speaking from personal experience here. So
that's true.
People and businesses are still coming to Texas. What can you, any of you tell us about the migration of internally within the United States favoring Texas?
I can start. We saw remarkable sustained migration to Texas even through the pandemic, which was actually surprising, because we saw, other states that had been pulling migrants domestically and internationally actually stopped doing so during the pandemic. But instead, if you look at the population growth rate in Texas in 2020, it was the same as in 2019. It increased by about 1.3%. That means that we sustained our levels of migration of people into the state, which really was a remarkable achievement. The other thing that we've looked at from the people who are coming into Texas and who came during the pandemic, actually, the only data we have so far is credit scores. And so we see a rise in the credit scores of the people that are moving to Texas. What does that mean? It means that we're pulling more high-skilled, more highly educated and high-income migrants into the state, to work and reside here. So it's a really positive development for our state.
As you know, Rick, we've been following migration using the IRS data, migration all the way back to the early 1980s. And Texas, most of those times, has been a huge winner, the number one winner for net state-to-state migration coming into the, and we get most of our, more than any other state, most of our new migrants from California. The New Yorkers tend to go to Florida, but this year, a lot of the New Yorkers have come to Texas. Now that's just anecdotal data, because the IRS kind of slowed down during the COVID pandemic. The data processing has slowed down as well, and they have not given us new numbers since 2018. The newest numbers that are available are anecdotal, and they come from the U-Haul data. And based on that, Tennessee was the number one state for net one-way trailer rentals last year. Texas was number two, but Texas has been number one or two for all the last 5 years. So we're still adding the people, and they're coming from everywhere. And they're definitely, though, they're leaving. The one theme that's still going on is they're leaving California and they're leaving New York.
And great points. And one of the reasons, right, getting into some of the policy would be that they have a high taxes, right? That's at least one of the issues that I look at. Is you have what was the highest personal income tax rate in the nation in California at 13.3%. New York just raised theirs, so they're now going to be the highest in the nation. And so whenever you have a high tax, high regulatory situation where it's difficult to start a job start a business to get things going, so that way you can hire people, along with the fact that you're going to have less take-home pay, and you're raising the minimum wage all at the same time. So you have a number of factors that's contributing to less job creation, especially what I would argue for those who need it the most, those sort of issues are going to be ones that are really going to hit you hard. And so a lot of those folks from New York and California have been moving to places like Texas and Florida and Tennessee that have no personal income tax. And I think that's a key point. Something that we like to call here at the Texas Public Policy Foundation, the Texas model, right? Of no personal income tax, relatively less overall government spending, which helps to keep our business tax climate good and comparable to a lot of other states. And then you have a sensible regulatory climate in general. And so I think by having those sort of things in place, we allow for an opportunity, an institutional framework to allow for more growth and prosperity to come about.
At the Bridwell Center, we're a little more expansive about it. We call it economic freedom rather than the Texas model. But
there you go.
Well, I got you here, Vance. What can you tell me about the fiscal position of the state? Are we broke?
We're not broke, and so as you know, if it ain't broke, don't fix it, sort of thing. But look, we took a hit over the last year within the budget. And fortunately, the legislature last session in 2019 left a little over $2 billion on the table to deal with any sort of cushion like this. Nobody's foresaw the pandemic hitting, and so there was the pandemic that hurt the economy, job creation. People spent less. About 60% of our revenue to the state comes from sales tax collections. So that went down tremendously over those first couple of months whenever we were shut down, and then people weren't getting out and purchasing things as much as they were before. But we have started to see that rebound pretty quickly. Even yesterday, the Texas Comptroller, Glenn Hager, came out with a revision to his biennial revenue estimate that was released in January. It's released before every legislative session to kind of give the path forward, the amount that the legislature has to appropriate. And they have to be within those bounds based on our constitutional balanced budget amendment, which is an important part of the Texas fiscal situation. And yesterday he said that, look, we've got $3.1 billion more dollars than what they had just forecasted anyway over the next couple of years than what they had projected just back in January. And this actually meant that for the 2021 biennium that we're currently in over these two fiscal years, where some other states were hit really hard, we're actually going to have a surplus of a little over, I think it's around $700 million, which is pretty remarkable given that back in last July, whenever he did a revised estimate, we looked at a $4.6 billion deficit. So we're talking about a $5 billion swing in less than a year. It's pretty remarkable the amount of growth that's come about. Now, some of that could be that you have from the unemployment benefits, right? Payments that were going out from the stimulus checks that people were receiving. They're taking those dollars and spending them for the honeydews. I know I've received a lot of those from my wife over time, right? Or other things that we want to purchase, which if y'all seen lumber prices, we might be able to get into some of the inflation stuff later, but that's a whole nother thing. But having a sales tax dominated tax system has benefited us whenever those dollars have come down and people have spent those monies. Whereas if you're in an income tax state, some of those taxes are not collected by the state, right? Like if you're receiving that income from the federal government, it wouldn't be taxed at the state level. And so you would be benefiting the state anyway of additional tax dollars that we were able to receive in additional sales tax collections across the state. So that's helped. And I think we're looking at a good position right now, but the budget that the state has passed in the House and the Senate, right now it's in the conference committee to iron out the differences. But as of right now, in my view, it's a good budget. It's within population growth plus inflation, which is a good measure of the average taxpayer's ability to pay. We're maintaining property tax relief from last session of about $6 billion in the budget. So these are good things that I think will help to keep Texas strong. And should they do more? I probably so. But I like what I'm seeing so far.
I got a question from a listener who wanted to ask, what about housing costs? So this has been a competitive advantage for the Texas economy, and that's part of what draws people here. It has been drawing people here, but we're seeing a lot of house inflation recently. Is this going to be a problem for Texas? Anyone? It's
definitely an issue, and it's increasingly so. And so what we saw is with the mortgage rates going down last year, we saw that, or even in 2019, we saw that affordability of housing, moved up. But then with this incredible surge in housing prices in the last year or so in Texas and really across the nation, we're seeing affordability indexes are going way down. And we're hearing anecdotes at the Fed from our contacts and so forth that, there's people who have tried to move to Texas and couldn't find a house that was affordable to them. And so we are, I think, slowly losing some of that comparative advantage that we had historically, because really up until really the last 10 years or so, house prices in Texas were very flat. They were not increasing. We were able to keep pace with demand by increasing supply, and that's really changed. And the other thing I want to mention about that is it's not just house prices. And I know Vance is emphasizing, we don't have a state income tax, but we do have very high property tax rates. And when they go up, when house prices go up, those property tax bills come due and they're really high. And so if you compare our tax burden with like New Mexico, we actually, and they have a state income tax, we don't, but still our tax burden is higher because of the property tax.
Mike, you were a former, Mike,
right.
Let me ask you a question, Mike. You're a former chief economist at the Fed. Inflation, all these prices going up. Is that something we should be worried about?
I'm not worried about inflation, honestly, Rick. In fact, I got this question recently from a friend, because the money supply has gone up so much over the past year and a half, well, ever since the beginning of COVID, but that's almost entirely due to the fact that the demand for money went up so much. A lot of people during COVID opened up big bank accounts and took some of their assets and moved them from financial instruments that were not in banks over to banks to get the deposit insurance, which is I opened up 2 accounts, one for myself and one for my wife, and maxed them out just in order to be sure I had as much deposit insurance as possible. A lot of people did that, and that caused the demand for money to go up. And so the Fed accommodated with a huge increase in money supply, allowing a huge increase in money supply. And that's one thing I wanted to say. I think Pia talked about fiscal policy, and I think the Fed did, and I'm not typically a big champion of Fed policy, but I think Fed did a great job, especially in terms of what they bought during this recovery and during this, to support the economy. They were practicing something like what's called the real bills doctrine, not just buying the debt of government, but propping up businesses too. But no, I'm not worried about inflation at all in this case. And what you're talking about, housing prices rising around here, yes, they are, but there's still so many places that people are moving from, and so much money to cash in California and in New York with expensive property that people can move here and from those places and buy a house or 2 and still put money in the bank.
All right.
I might make a little bit more of a cautionary tale for the monetary policy that's been done. But I mean, because even if you look at the inflationary side of it, we have, in my view, too much money chasing too few goods, right? And so there is going to be some inflationary pressures that are out there. We're not seeing it yet in some of our more general level of prices like CPI, but I mean, we've seen it in real estate, we've seen it in asset prices, we see it in lumber. I mean, I think that we're seeing a lot of inflation in a lot of different areas. And so it's something to keep an eye on as the money supply has increased so quickly. And where are those dollars that are flowing? It's not helicopter drops, it is going somewhere. And so I think that we should be a little bit cautious. Maybe in my view, I'm pretty cautious overall about how this will influence the economy and what this will mean about the future. And when I think about my work at OMB and when we were looking at the federal budget, at that time, when I helped write the president's budget for fiscal year 21, we weren't going to balance the budget until 15 years later. That gives you the situation that we were in overall. And that was before all these expenditures of $6 trillion that have been put out in the economy from the CARES Act and other things and the ARPA, you name it. And then we've got potentially another $4 trillion that have been proposed within the first 100 days of the Biden administration. We've either had we've had $2 trillion that's been already passed. and we've had $4 trillion that's been proposed. Probably the most ever, I think, would be the most ever, even in real terms. In the first 100 days, $6 trillion worth of proposals. That money's got to go somewhere. And so when I think about the deficit and interest rates being so low right now, it's not just the interest on the debt that matters. In my view, it's about every government spending dollar has to come out of the productive private sector. And so there's a redistribution that takes place. And so I think that there's some concern that we've got to get these fiscal deficit and ultimately spending under control to therefore hopefully keep an eye on inflation and other metrics later. Or, and I saw this in some of the question and answer from the audience members, maybe Ray, I think we're in the situation of modern monetary theory, which I don't agree with and believe it's nonsense. But at the same time, I think we are trying to practice that in some capacity, and that would be a mistake.
All right.
Did you want me to say something, Rick?
No. I want to try to switch the. Yes, Pia, please.
Oh, sure. But I just wanted to say, I agree with, Mike and Vance both have really legitimate points about inflation, but I just want to remind everyone that the Fed is currently trying to get more inflation. So after fighting inflation from below for 10 years, I think the Fed as an institution under this new policy framework that we have are trying to get inflation up. So just the question is, we're running hot. Obviously, the Texas Business Outlook surveys that we run at the Fed, they suggest that some of these selling price indexes and input costs are at record levels or increasing at record rates. So again, some of that is desired. That it's just a question of controlling it, using those tools to control it when the time comes.
I like to start taking a longer term view of the Texas economy. And I think that we're in a position that where what there was, say, when we stepped off in 2019 may not be the same thing that we have when we restore all the jobs and things in 2022 or whatever. And this brings us to things like the fossil fuel transformation that appears to be going on and being accelerated by government policy. And Texas being the number one, Mike, the number one oil producer, I think it is, in the world.
Well,
in the U.S.
In the
U.S., not in the world.
Anyway, energy transformation seems to be a very, very large concern for the future of the Texas economy, right?
Right. So we've had, I don't know, it depends on how you count them. We've had, of course, as you know, three big drivers. We've had the energy driver, which was oil. We've had the trade driver. We're the biggest export state in the nation. And we've had the population driver, which was all mainly fed through, well, it was immigration from other countries, but even from other states. You might ask, though, but our real driver has been economic freedom. We can continue to be driven by economic freedom. There's nothing stopping that. Nothing has to stop that. And that will can continue for us to be a driver for immigration to this state. But I don't know how we can continue to count on, and I don't think we can, on energy being a driver unless we do it through wind or solar or something other than oil and gas. I'm concerned about trade, not just in the short run, but in the long run. And Pia can speak to immigration, and population growth in general.
Sure.
He teed it up for you, Pia.
Yeah, thanks, Mike. Yeah, no, I agree. I mean, on the energy transition, I think when you talk to the energy guys, and we have an energy survey as well at the Dallas Fed, but what they tell us is sort of, we'll never get completely away from fossil fuels just because of some of the characteristics of renewables. You're always going to need some real reliable source of energy, okay, notwithstanding winter storms and so forth. But But so they're saying in the long run, we'll be like 80% renewables, 20% fossil fuels. And so that might be in 2050 or 2060 or so. But in the meantime, I mean, I just remind everyone, we're also #1 in wind in Texas. So it's not like we only do oil and gas. But I think in terms of the long run future of the state, I think that whether it's economic freedom, we call it, that's a very broad term. But I think what you need is for the key essential element is for the economy in the state to be able to adjust, to be flexible, to change. And so whether that's going from fossil fuels to renewables, whether that's bringing in new people, making sure they have opportunities, whether that, whatever that is, but that preservation of that opportunity to start a business, to make a life, to come here, to be integrated, assimilated. I mean, all those things are the key ingredients. I think if you have those, if you can change with the changing winds of the economy, with pandemics, with everything else that happens, that we can't control. But if you as a state, if we can preserve the institutions that allow us to change and be flexible and grow despite those headwinds, I think that is the ultimate key to success.
Yeah.
All right, Vance, go ahead.
No, I think those are all excellent points. And one thing that comes to mind is what Larry Kudlow used to say on Kudlow Report was, free market capitalism is the best path to prosperity. And I truly believe that. And I think that if anything, we need to continue to have a robust capitalist system in Texas that allows for markets to work. And so one thing that I hope that will happen within the energy sector is that we get rid of subsidies and tax breaks for any of the energy companies, oil and gas, renewables, whomever it is, and let the market work. And I think that will be a great path forward to where we can figure out, if we have more information and entrepreneurs have more information about which direction we should go, to make sure that we have reliable energy for the future. We saw that with the blackout. I don't know how you all did, but we were out of power for 3 days. It was an unfortunate situation. And many people are upset. We're upset and still upset about that thing. And what's that going to mean about the future? I know the legislature, I'm only 2 blocks south of the Capitol, so I'm kind of pointing in that direction. But at the Capitol, they're trying to come up with a lot of new laws. But I hope that those laws don't take us in the direction away from allowing markets to work, because that, I think, would be a disservice to Texans and to our overall economy for the future. And so when we look at measures of economic freedom, like the economic freedom of North America, Texas, I believe in the latest report, ranked 4th. Most free. I would love for us to get to #1. I'm a Texan. I was born in Houston. A Red Raider, went to Texas Tech. I'm a Texan true and true. And I always want us to be #1 in Texas and not #4 or something else. So we've got some work to do, whether it be to Pia's great point of reducing property taxes. I think the work that I've done here at the Texas Public Policy Foundation is to figure out how to actually cut property taxes, not just reduce their growth, but actually, cut them, moving closer towards a sales tax based system versus a property tax system, by finding regulations that are keeping housing prices higher than otherwise and things of that nature, and ultimately limiting spending more. I mean, in my view, high deficits and taxes are always and everywhere a spending phenomenon, to use a Milton Friedman quote about inflation, right? Just turning it over to the fiscal side of things. And so Texas has some work to do, but if it's going to happen, it's going to happen in Texas, because, as being the 9th most, if we were ranked as a country, we would be in the top 10, put it that way, along with California. And so we've done a lot of things right, but I think in order to keep that going and improve things over time, we need to look at reining in where government is too big, in my view, and looking at some of the headwinds that I see that are coming from DC, even if that's from the monetary side of things, where, maybe the monetary policy central bank is getting more involved with fiscal policy, or if you have a larger and larger government deficit, what influence is that going to have on Texas if they start cutting funds to the states. I think that would be one of the places they would start to cut first. That would influence Medicaid and things of that nature, along with the deficit and what the effects on interest rates would also mean to our economy. And so I think we've got some things to make sure that we get out ahead of before those things come to bite us later.
We have I have a question that comes in from one of the listeners, viewers, I guess we should call them, about NAFTA, USMC, and the situation. What's happening now that we have the USMCA in place, and with whether Mexico is going to continue to become, trade with Mexico can continue to become a driver for the Texas economy?
Mike, do you want to go first, or?
I would just, I mean, I'm sitting there thinking about using it as a jab to get back at trade policy under the past administration. Protectionist trade policy. I was not a big fan of Wilbur Ross, I'll tell you that. And if you want to know why lumber prices are going up, why did we block all that Canadian lumber from coming in here? So, we could have a lot freer trade today than we have, and it would be good. Trade policy for the United States, as for most countries, is written to benefit producers, not the consumer. And it's supposed to be written to benefit consumers, but it's typically a big political game. And that's where America could really make huge gains, is to get good trade policy back.
I agree with Mike. So the research shows that USMCA is a real step backwards from NAFTA. NAFTA was freer trade. USMCA actually is less free trade. And so that means less gains for the consumer, less employment, less productive activity, especially for the auto sector, the automobile sector, which is very integrated across Mexico and the United States and Canada. So it was a step backwards. It wasn't, the end of trade, obviously in North America, but it was a real mixed picture, not too positive.
Some work that Mike and I did, we found that over the past 2 decades, the big boom in Texas exports was largely fueled by fossil fuels, and so if we're not going to be able to send so much of that overseas, we may see less of a trade becoming less of a driver for the Texas economy. Labor shortage.
Yeah, and that was actually the lifting of the export ban was under the Obama administration, or at least he signed it. It was Congress, but the Obama signed it in law. I think with Mexico, and I agree there were some complications with the final version that was probably a little bit more geared toward labor unions than what I would have liked, like the auto industry, for example. But with Mexico is having having a lot of problems with their economy right now. If you look at their economy, they're continuing to struggle from the pandemic, for a number of reasons, but also the growth of the cartels and the violence that's been going on down there as well has contributed to slower economic growth. And so whenever you have that sort of slower economic growth, people tend to move with their feet. And so many of them have wanted to come to the United States, which I think is something that we need to look at with our visa system and some improvements that we can have here, while also understanding that we need to know who's coming in and across our border, because I believe also strongly in the rule of law. But it's not just those from Mexico that are coming, it's also from Central America, where they're also dealing with some pretty devastating conditions when you think about their economy and other sort of situations from their government. And so I'm hopeful that, part of this would be that we have more freedom, speaking of economic freedom, among some of these other countries that allow for more productivity and business creation and jobs that are being added. And that would also help us. But ultimately, I also agree that we do need a more robust trade policy and allowing for more expansion of trade with other countries. And part of it within the Trump administration was to look at how do we deal with some of the countries like China, who don't necessarily care about what America does, or don't have the same environmental standards that we do. So the the more renewable that we go here in raising costs, the more that they're just going to do coal and oil there with not the same standards that we have going on here. And so that was at least the approach of the Trump administration, was to say, look, let's put these tariffs in place, bring them to the table, try to negotiate a deal. And we didn't really know what the result of that deal was, because right after phase one happened, you had COVID hit. And so that certainly influenced the situation. While at the same time, an alternative approach is to think about having a more robust agreement among multiple countries, maybe like the PPP or the TPP, the Trans-Pacific Partnership. I think those are different things to look at, because China doesn't play by the same set of rules like we do, and so I think that there is a challenge there, and so there was at least some discussion that I think it's important about the future of our country and the future of Texas, even though there may have been some disagreement on the actual policy path forward.
Now, one of the things, as you look back over the history of Texas, it has been perennially a labor shortage context state. And what about today? We were talking the other day about labor shortages. Is this going to be a hindrance to the Texas economy going forward, getting enough people and the right people?
Go ahead, Mike.
What's the question?
Question is the quantity and quality of the labor force? Are we have enough? Are people enough people coming?
And Mike, I could start. Well, one of the things that we're looking at is how to get. We need more people in technical skills. That's where you start seeing a lot of the shortages across the state. And so what we've been focusing on is more career and technical education, not as much of the 4-year university, to at least have some competition there to break down any barriers that they may be, because we do need people to go into plumbing and go into auto sector and things of that nature. And that's really where we were seeing a lot of the shortages before the pandemic hit. And I can only, imagine what the shortages in those areas look like now. And it goes into, we also need to improve our K through 12 education system. If we can improve the education system, that will also give more people opportunities to break barriers and to be entrepreneurs over time, to fill a lot of these gaps and with any jobs there may be in the future.
I would say, Rick, I'm glad you asked this question, or you brought it back up again, because one of the biggest problems of the pandemic, the long run sort of hangover of this pandemic, is going to be, I think, the carving out of the current student cohorts, the ones that, for example, graduated last year or graduating from high school this year. I mean, we're seeing much, much lower graduation rates. In the Dallas School District, they're saying usually they graduate 85% of their seniors. This year, they're going to graduate 60% of their seniors. This means we're losing a cohort of students that would, because if you don't have a high school diploma, you're not going to be able to go for that career and technical education that Vance was talking about. In order to get a federal government Pell Grant, you need a high school diploma. How are we going to get these kids back? How are we get them their GEDs? How are we going to be able to come back from this? This is really going to require some creative thinking about how to rescue, this cohort of students from these 2 pandemic years and try to get them back into education and back into training.
So let me focus the question on Texas. And, there's a lot of industries here where there's demand, construction, for example. Okay, so you focus the question on Texas, and let's suppose there's some sectors where we need more labor. You can either go through the long process of building that labor here by changing the school system, or you can import those workers from other states, and you attract them through higher wages here than those other states offer, through better conditions, more opportunity here than elsewhere, or you import them from abroad coming across the border. And that used to be the margin, the closest, easiest margin of substitution. We would get people here from Mexico or from Latin America or from anywhere else, and have an instant labor force of people able to do these things, get trained. But that has been cut off. Immigration coming from the South in particular is very difficult now. And so this hurts Texas in particular. And as Pia was alluding to earlier, we are not suffering as much as the rest of the nation is, because we are, as the whole nation kind of lost some of its immigration from Mexico and from other Latin American countries. We just imported the rest of the states.
Yeah, that's true.
We said, okay, and they said, okay, we'll take your Latin American workers, the native foreign-born workers, and we got them. But we can't. That game won't go on forever. So normally you would expect wages to adjust, but that takes time. Wages for people who are automobile mechanics to go up, and then people be encouraged, to join that, to go into that job and to go into that and to go get educated in that, rather than go into some 19th century French poetry class in a university.
The couple of questions from the listeners. The gist of them is about what to do about low-wage workers. We said that they're right now perhaps reluctant to work because of the unemployment insurance. How does what can Texas do to push people up out of low-wage work in the future?
Well, what is low-wage work in Texas? The cost of living in Texas is low compared to other states, especially compared to California or New York. So a dollar here goes much further than in other states. So, if you're making $15 an hour in Texas, is that a low-wage job? I'm there in my wife's business. She has trouble keeping people at wages below $15 an hour.
One thing I would say there would be, how do we remove some of the barriers that are in place for these people to get those jobs as well? One of the areas that I've worked on is on occupational licensing. Whether it's to be a cosmetologist, I think you need close to 1,000 hours versus a EMT that you need about 300 hours worth of training. So you need more than 3 times as many hours to be a cosmetologist over someone who I would argue can directly save your life with being an EMT. Why is that? And so it not only is it the hours, but it's the cost and everything else. So if you're already low skilled, have less experience overall, that you're more likely to get a low wage job because you're marginal product of labor and things of that nature. It's very difficult for you to negotiate anything when you can get that license. And so you're keeping a lot of these people out from that marketplace when they could go in and get a better job and hopefully improve their wage growth over time as well. Something else that we learn from a lot of the data that's out there is that people don't stay in low wage jobs very long. Even at the minimum wage of $7.25 an hour in Texas, you're on it for maybe an average of 6 months, and then you get a pay increase. It's a way to get your foot in the door to then show skill and on the job training and things of that nature to then demand a higher wage later. And so to Mike's point, yes, it's difficult to find somebody making less than $15 an hour when you have McDonald's, I think, that pays $10 or $12 an hour. You have Walmart that I think is right around that range as well. So a lot of these big time stores are paying much more than the minimum wage already. When you start thinking about those that are making the minimum wage, it's really a lot of more of the mom and pops, the small businesses that really pay those sort of wages.
I guess I would just add that, we do a good job in Texas getting low wage workers into employment, actually. And I think we do a lot of things right because we don't have a lot of restrictions on labor markets. And so we do have rapid job growth. In fact, job growth in Texas is twice the rate of the US on average now, for running on plus 30, 30 years plus. So I think we do this right. But then how do we move them from low wages to higher wages? And I think that just gets back to education and workforce training. And for immigrants, it gets back to learning English. That's super important. We know from the research that's a really clutch. And then of course, immigration reform. If we had, Texas has almost 1 million undocumented workers. If we had an immigration reform, I think that would also help them, move them up the wage ladder.
We're running short on time. I'm gonna pop a few very specific questions from our listeners. One of them asks Dr. Cox, at what point you said you weren't worrying about inflation, at what point would you start worrying about inflation?
When the numbers, when I can see the whites of its eyes, like Pia was talking about, they're having a hard time getting inflation to show, and that has been the experience ever since 2009 with that recession. The Fed increased the money supply tremendously during that episode of recession, yet we had nothing came of it, and eventually in terms of inflation. The same thing is happening now, yet nothing is coming of it in terms of inflation. Both of those episodes were met with huge increases in the demand for money. And the Fed, I thought, again, I emphasize, I've been extremely critical of the Fed in my 25 years at the Fed, but this is one time I think the Fed has done a very good job of keeping the economy from going into deflation. And if you want to really see some carnage, you just watch the economy go into deflation. If you go back and you look at the history of America before the Fed was created and you see some major boom and bust periods, what you see is a bust caused from deflation. And that would have happened this time too, as people tried to move into having more monetary assets. That would have happened this time too. We would have had massive deflation had the Fed not met the increase in the demand for money with the increase in the supply of money. But they did, and the price level remained remarkably stable. And coming out of it, if the need be, and I think it probably will, the Fed will take some of that money out of the economy, and I don't think we'll have a major price hiccup.
And somebody was intrigued, Vance, by your suggestion of lowering the property tax burden. Just a short synopsis of your idea, because how do you lower the property tax burden without implementing a state income tax?
Yeah, so I would never suggest that we should have a state income tax. I remember when I moved to Virginia, McLean, Virginia, for that year I was at the White House, and the first check I got and I saw in-state income tax, I was like, oh my gosh, what is this? This is horrible. More money coming out of my paycheck, But the way that I suggested to do this is maybe starting with our school district maintenance and operation property tax, which is about half the property tax burden in Texas, which is really controlled by the state legislature already with their school finance systems. It just makes it look like property taxes are funding local school districts, but it's really determined at the state level. And so what I've suggested has been that we broaden the base of our state sales tax such that we could bring in enough revenue that would cover that school district maintenance and operation property tax. You may have to raise the sales tax rate a little bit. From the research that I've done, you would raise it from 8.25% today, state and local government, state and local sales tax rate, to 8.5%. And so that's the combination of both, which would make us have the 11th highest state and local sales tax rate in the nation compared to 14th where we are now. So not a huge increase in the sales tax burden, but you're cutting the property tax burden in half. And there's been some key reforms that have been put in place by the legislature over time to try to slow the growth of property taxes, but it hasn't quite worked out well enough to actually reduce that burden, because I do think it is something that is driving people out from owning a home, especially those that are low income and on fixed income, and it's keeping people that are low income and fixed income from owning a home. And so those are certainly some issues that I see in Texas that we could overcome, and I think get to a better tax system that's more conducive to economic prosperity versus having more burdensome form of taxation overall.
All right, we're running low on time, and I want to just finish up by asking each of you to think about a broad question. You know, as Pia mentioned, the Texas economy has been outperforming the rest of the country for as long as I've been here anyway. And so looking ahead, this two-part question is A, will that continue? And B, what is the most important thing we need to keep in mind, keep in focus, make sure that continues? Start off, Pia, how about that?
Sure. Yeah, I think definitely the Texas economy will continue to outperform the nation, even though, you know, some of that comparative advantage that we have, we talked about housing costs, and in other areas like taxes is going to be not as great as it was in the past. So we are going to also feel some growing pains in terms of providing, you know, good quality K through 12 education, good community colleges, infrastructure. All the other growing pains of the Texas economy have to be addressed in the long term in order to continue to sort of do as well as we have in the past and continue to outperform really the national average. I think those are the key issues.
Vance?
Yeah. No, I think those are great points, Pia. And, you know, whenever I look into the future and try to figure out what's going on with Texas, I really think the future of Texas is bright. I mean, I've got to be long Texas. And I think that there are a lot of good things that are happening here. You know, we really, I think, are at the forefront of economic freedom and prosperity. You know, we've had a tough year in many ways, but I'm hopeful that we can get back to the pace of growth, the job creation, the prosperity that we had before the pandemic hit. I see a little bit of, you know, clouds coming from DC, which happens often, but Texas has withered those sort of clouds in the past, and I think we'll do so again now.
Michael, you are the home team, the Bridwell Institute.
In 1984, I left Virginia Tech and went and deciding where am I going next. And I made a list of all the different, you know, what are the pluses and minuses of going here versus there. And I remember going through this thought experiment, why do I go to Texas? And I went to Texas for the following reasons, and I think this is why most people go to Texas. I saw this as being a place where I could come and raise my family and pursue opportunity and have a better life for myself and my family with low taxes, affordable colleges, good colleges, you know, where my kids would probably could go to school here, and it wouldn't be too expensive to go to A&M or they could go to SMU, they could go to affordable schools. There would be a couple at least big cities where my kids could live and have a job, and they could still settle near me. That happened. They all live in Dallas. The government was small enough that it wouldn't be intrusive. There would be less regulation. The cost of living was low. I could afford a nice house. And then the K through 12 schools were good. They are good. If you compare how Texas white students score compared to white students the rest of the country, blacks compared to scores blacks, Hispanics compared to other Hispanic scores, we score very high. So our schools are actually good compared to those in the rest of the country. So I think we'll continue to grow as long as we keep regulation low, taxes low, and keep this a land of opportunity. And our schools are, and I see our schools getting better around DFW, and I think hopefully they can continue to get better. That's what makes people move. Place for their family.
Well, I want to thank you, Mike. I want to thank you, Vance. Thank you, Pia. And I want to thank you for tuning in. This discussion will be on the Bridwell Institute website soon, and perhaps Vance might put it on the TPPF one. And you'll get a notice if you subscribe to this. I think you'll get a notice for when it's available. And we are looking forward into the fall where we have the 11th Texas Economic Forum. And we have this great hope that it will be on campus and in person. So we hope to see you there. Thank you.
Thank you.
Thank y'all.
See ya.
Bye.